What's up, gang? Zach here from the Trading Network. I hope you guys are doing well. I have yet another scalping video or trade breakdown for you guys. Yet another trade on NQ. Yet another short opportunity zone trade on NQ. Are you guys noticing a pattern between the bearish market activity and the increase of short scalping videos? It's not a coincidence. You want to make sure that we are asking ourselves where momentum is, who's in control, and hopping on the side of that momentum as much as we possibly can. And that is exactly what I did today. So first and foremost, let's break down the technical confluence factors as well as the if-then scenarios that I created for this trade, right? So we had broken the current point of control. Okay, that was at 11,566. We proceeded to break down below Fibonacci pivot S3. We proceeded to break down below the initial balance low from December 15th at 11,526. So my thought process was, if price could not move back above the initial balance low and use this as support like so, then we were very likely to break it and retest for further downside. Now, when I see a situation like this, when I see us break a major level and then come back to retest and we start to reject it with a lower high and or a local top, with the oscillators getting extended in one direction, that gets me ready to take a short trade, okay? So what I was looking for here as my final trigger to enter was proper candlestick structure. I wanted to see a local top confirmed, which for those of you not familiar would be a current bearish bar closing below the low of the prior bar, right? That is my final entry trigger. I never enter a short trade unless I have a local top, and I never enter a long trade unless I have a local low. For example, you can see a local low right here with this bullish bar closing above the top of that prior bearish bar. Now, the reason that I didn't get long there is because we had changed behavior. Sellers had regained control. We proceeded to make lower highs and lower lows consecutively. And when I see that, that tells me to avoid trying to catch a falling knife, to avoid trying to catch the bottom or time the bottom, and do my very best to join the momentum, right? So that's what I did on this trade. You'll see here, as I click play, I was up, of course, $1,300 or almost $1,400 at this point in the day. And I saw this very good setup, this high probability setup with great risk to reward present itself, okay? So right there, as soon as that candle closed, I entered short, okay? So you'll notice that we have a tick counter here, and I'm watching and I'm waiting for the tick counter to get to zero. And as soon as that tick counter gets to zero, I smack my hotkeys and I enter my position. You will shortly see that I place my stop loss above the prior swing high right there. So I am risking 11 points on this trade. I am in at 11,524. My stop loss is at 11,535-ish. So I'm risking right around 10, 11 points on this setup. And you know that the prior swing low is all the way down at 11,505. So this is a 2-to-1 risk to reward or very close to it, right? And oftentimes when you get in setups like this, as soon as you enter, you will indeed see price move right towards your stop loss. Do not be afraid when that happens. Understand that price needs to breathe. Price needs to move around, and that unless your technical invalidation level is breached, the trade remains valid. It's very important. I'm going to repeat it again. Unless or until your technical invalidation level gets breached, the trade is still valid. So we have a little joke in the Trading Network, especially on the live streams, is that, we'll repeat out loud, the trade's still valid, the trade's still valid, the trade's still valid, just to keep us almost one-track minded, because we can think ourselves out of really good setups very, very easily, right? And in this example, my technical invalidation level is indeed the prior swing high, or the prior high that was just printed, basically where I got in, okay? So my thought was, if we moved above this level, we very likely we're not going to stop there. We are at the very least going to revisit this area where we have this bunch of moving averages, as well as the first lower deviation of VWAP at 11,550, and right above that we had S3 at 11,555. So if price broke back above this, it was likely going to start to make higher lows and make higher highs as well. So that invalidates my trade. It is so important to have a clear level where your trade idea is invalid instead of, or as opposed to just entering in sort of no man's land and not having a clear area where you say, okay, well, this trade idea is trash now because we've broken a certain level, right? It's so key to have the if-then scenarios for your trade, right? If price breaks above the prior high, then my trade's invalid and we're likely going higher. If price cannot break back above the initial balance low, then we're very likely to go, more to the downside or have further downside pressure, and this trade is more likely to play out in my favor. And that is exactly what happened. So you guys will see price moves around for a little bit, but not too long after entering, it starts to go in my favor, right? I'm fast forwarding a little bit. And this is normal, right? If you get into a good setup, it's not always going to go immediately in your favor, especially in a situation like this where liquidity has to be absorbed, right? People are consistently trying to catch the bottom. People are consistently, as soon as price starts to move sharply to the downside, especially, we as humans, we are just naturally programmed to want to go long when price is moving down because we, for some silly reason, always say to ourselves, oh, well, it's got to bounce here. It can't possibly go any lower. And guess what? That is why price goes lower. It's because so many people try to catch a bottom, and those stop losses from those long trades in attempt to catch bottoms are propelling, they're getting hit, and they're propelling price further to the downside. And we will see a great example of this very, very shortly. So you can see that I don't touch my stop. Most people, as soon as price moves towards their stop loss, they're grabbing it, they're moving it up above the next level, they're grabbing it again, they're moving it above the next level. If your trade gets invalidated, just take the hit and move on to the next setup. Don't dwell on it. Don't be mad at yourself. Don't beat yourself up, especially if it's a really good setup to begin with. So in situations like this, I am happy to get stopped out. And I say that on stream all the time. And, especially new people to the group, they're like, is he joking? Is he really happy to get stopped out? Yes, I am totally happy to get stopped out because I know that my stop out is telling me, it's giving me important market information. As soon as I get stopped out in a large majority of my trades, I know that I have a trade opportunity on the other side almost immediately, right? And you could say that it's cavalier, for example, to, enter too short and then set a stop loss for 4 here, right? So as soon as I get stopped out, I'm actually long for 2 for the move back to S3, right? Consider that. Consider that when you get stopped out, there is not only information to be gained, but there is also, in a lot of circumstances, a good trade opportunity on the opposite side because it's all about understanding how liquidity works. It's all about understanding that it's a tug of war between buyers and sellers. And if buyers won in this instance, there's going to be a lot of stop losses, including mine, above this area, and those stop losses are going to propel price higher. In this case, this worked out in my favor, as you'll see that I even add a contract. I think it's just one contract that I add, maybe 2, to this trade when we break a certain level, and I get that same benefit of the liquidity being run, the stop loss is being run in my favor, and that just helps me make that much more profit. So you can see here that price starts to move in my favor, right? And as we break down, we have a little bit of a probe here as well, which I will show you guys. So let me just make sure line tool is the right size. So we have a little bit of a diagonal trend line, which we call probes, right? When probes get broken, there are typically very fierce and fast reactions, especially to the downside. So that is what we saw here. We saw that. I allowed price to work in my favor. And although I could have closed in this area, right? And I did take one. I could have closed the entire trade because, this is a solid area to target. It's our next major level. But I wanted to pull some profit. You'll see that I changed my stop loss to one contract. I began to trail my stop loss. And then on the break of these lows, I decide to add another contract, okay? So let me show you here. I put a sell stop limit. I'm already short. So I put a sell stop limit for one contract under the value area low. Because my thought was, if we broke this level, again, a lot of people are going to be getting long in this area. They're always trying to catch a bottom in a downtrend, and their stops are going to help my short trade get further into profit and make me more money. So I'm going to play this at normal speed and watch what happens when I get hit for that second contract. Watch the reaction. Boom. Stop losses are getting run. You can see price you know, if you, especially if you have a price line, the price line indicator involved or put on your chart, you can see how price will get a lot more, you know, rigid, and it'll start to move really quick. That's a bunch of orders, a bunch of stop losses being run. And this is actually, you know, even slower than it happens in a lot of situations, but it happens every time. It's like clockwork. You know, people just always want to try and catch the bottom when we're in a downtrend, and people always want to try to catch the top when we are in an uptrend. So you'll see that at this point, I have both of my stop losses in profit. I am allowing the trade to work out in my favor. I do have this target down at 11,480, and I will show you guys, you know, price continues to mess around in this area, but it eventually starts to work in my favor. And I do get stopped out in profit. I'll show you guys. You know, I'm just moving my stop losses. I'm altering them. I'm trailing them on the price line with a tick offset. So as price moves in my favor more and more, the stop loss gets tighter and tighter. And eventually I get stopped out in profit and end up closing the trade there. But this is an example of how you can think differently than the herd, right? Most people would be closing their trade at the value area low, which there's nothing wrong with that. But if you can understand that liquidity is going to work in your favor, or these liquidity voids, or the ability to understand where a lot of people have their stop losses, you can use that to your advantage, right? A lot of people are long here. Not many people are taking profit that quickly, right? So that means that their stop losses remain below the swing low. And that's why I will add to my trades where most people are getting stopped out of their attempt to catch a falling knife or trade the reversal, right? So I'm in for one. I set my order, especially, you know, when you see price action like this, when you see another lower high get confirmed, which is this candle closing below the low of the prior, okay? So I set my order right there at 498-ish, 497. It gets run. Price moves down, you know, another 5 points or so. I see the strong bullish bar, which causes me to tighten my stop losses, put both of my stops from my initial entry and my additional entry in profit. And I close my trade. After the first, you can see I get hit there. I've got one. I'm short for two. I get hit there. I'm short for one, but my average entry moves down because the last contract that's left was my additional contract. And at that point, I'm manually closing my trade. I am ending this trade idea, and I'm waiting for my next opportunity. So although we didn't get a huge flush to the downside, we got, you know, an extra 5-7 points, whatever it might have been. I pulled both of my stops into profit, and I just took my profit there. And I told myself that it's okay. I always tell myself that as long as I'm paying myself, as long as I'm taking high probability opportunities, being flexible is the most important thing. You know, I'm not going to try to hold this trade forever, especially if I see evidence that there are buyers stepping in. When you see these large candles like this, when you see price stop at an area at a major level like this, which is the value area low and the current low of the session, you can see here on the profile that the price was making new lows as this was happening. And when that happens, there are certain factors that can occur, like a local low, right? Local low got printed with a very strong bullish candle. I'm not necessarily as inclined to hold that trade for much longer, especially if price is not continuing to the downside rather quickly. So this was about an $800 trade in a matter of 8 minutes or so. I'm not sure if I pull up the labels. And price did end up, continuing down. And this is an example of, it wasn't managed perfect. I have things that I learned from trades like this, and that's why I record my charts or record my live trading as well, is because, sure, it's great to, record trades for content that I can post for you guys, but it's also great to review, right? I could have trailed my stop on the 50 EMA. I could have trailed my stop on the 21 EMA with a little bit of an offset and captured more of this move. But I think it's important to be transparent that, I don't manage every trade perfectly. Yeah, I locked in almost $1,000 in, under 10 minutes or something like that. I had a really great setup. I mean, my initial entry was beautiful. I had really, really tight risk. It was great risk to reward. So, for what it's worth, I still made 20, 25 plus points on this trade. In at 524, my stop loss was 10 points. I took my first contract in at almost 20 points profit at a 2-to-1 risk to reward. And then I added when we broke those lows. And then I took the rest in, about 25 to 30 points away from my initial entry. So this was a 2 or a 3-to-1 risk to reward. Sure, I did not capture the whole move, but I remained flexible and I thought differently than the herd. I did not try to catch a bottom. I wanted to not only join the side of the momentum, but I wanted to add once I saw an area that people were likely once again trying to get long and catch the bottom at, and I wanted to take advantage of those, retail traders getting long there. And that's my goal. I want to be on the side where the momentum is. I want to be in the pockets of the big boys, if you will, and I want to ride that momentum wave. So that's exactly what I did there. And you can see I entered, let's see here. I entered right around 9:02, probably 9:01, 9:02 a.m. I was out of my first contract a little after 9:05, and I was completely out of the trade at 9:12-ish, okay? So call it 8 minutes, call it 10 minutes, whatever you will. High probability trade setup. I learned things from, the way that I managed this trade. I did a lot of things well, and there are things that I can improve on as well, and that's really a valuable piece of recording your screen. So with that said, if you guys aren't recording your screen, I would highly recommend it. There's one thing to be said about like going back and reviewing your old trades and, just pulling up the labels and trying to critique like your entries and your exits. But if you watch what you do in real time and you especially record your face and you record the audio so you can hear what you're saying out loud, for me, it's a little bit different because I'm not trading by myself. I'm trading on stream with a bunch of other people, and we're chatting and we're talking about technicals and things of that nature. But if you're trading by yourself, record your screen and review that game film. It is truly one of the best ways to get the most in-depth information about how you are analyzing the market, how you are reacting to the market. Are you moving your stop as soon as price moves towards your stop loss? Are you moving your targets way out, in hopes that you catch a windfall trade? Those are very, very important pieces of information that are overlooked by basically, all traders that don't have a community to build with, especially where everybody's recording their screen, everybody's posting, video reviews and game film, as I like to call it. This is very, very similar. Trading in general is very, very similar to professional athletics. Professional athletes, they analyze game film. They look at what they do well. They look at what they need to improve on. They look at others' game film, other players, other teams' game film, so they can learn how they are operating and things to learn from other players as well. So I just wanted to plant that seed as well. I use OBS to record my screen. It is a great free tool that you can download as well. Give it a Google. OBS broadcast, I think, or something like that. Open broadcast software, I think, is what it's called. You guys can find it really, really easily. It's used by a ton of content creators. So highly, highly recommend that. I don't want to go on a tangent there, but I think it's important to put out there because the value that you can gain from just watching yourself trade in real time or recording your trading in real time and then watching it back later is truly invaluable. So with all that said, I'm going to start to wrap things up here. I want to thank you guys first and foremost for taking the time to watch this content. Been getting a lot of love on the channel, and I just have to thank you guys once more for that. If you guys do find value in this content and you like what you're watching, please feel free to like, subscribe, and click that bell notification to be notified every single time that we post videos here on the channel. If you guys want to learn more about joining our private community, once again, this trade was taken live on stream in the Trading Network private Discord, where I stream my trading every day, Monday through Friday, starting at 9:30 a.m. Eastern. Check out thetradingnetwork.io, where you can purchase access to our most popular offering, the Trading Network Pro Trader Bundle, which includes lifetime Discord access to the Fundamentals of Futures Trading course, where I teach the Opportunity Zone, the Momentum Flip, trading psychology techniques, and much more, as well as access to the Trading Network proprietary indicator package. Check out our website, where you can purchase all of those products standalone as well as in the Pro Bundle as well. I also offer one-on-one mentorship. Our most popular mentorship programs are the 4-week and the 10-week. 4-week consists of 20 one-on-one, 1-hour live sessions on Zoom with me, and the 10-week consists of 50 one-on-one, 1-hour live Zoom sessions with me as well, where I will work on anything that you guys need to improve on. I critique your trading, I help you with trading psychology, and anything in between. So if you guys have any questions about that, once again, drop them in the comments below. Feel free to email us at info@thetradingnetwork.io, and we will get back to you as soon as possible and help any way we possibly can. Thank you guys once more. I appreciate your time more than I can even explain, and I will see you in the next video. Cheers.